Good afternoon, everybody. Welcome to 12-Minute Trading. My name's Doc Severson. I'm joined by Dave Lukas over here. Today is Monday, the 17th of June, and we have a little party in the market going on today. We've got just about all sectors up right now with the exception of real estate, utilities, and healthcare. Everything else is jamming. I don't know why. And that's actually kind of liberating, not knowing why the market is going nuts today, because we're just focused on the price and we see what's happening with the price, and we're just making the adjustments and trades and doing what we're doing. So Dave, you and I talked quite a bit about this recently. What are some of the things that you think are, what do you see in your crystal ball here in the next few days?
This is the typical summer rally. We've been calling it for a good month now that we would see this. The thing that is kind of shocking right now for me, and I talked to my students about it this weekend. I made some adjustments last week to some of my trades that I do, my larger trades that I do on the NDX, because the NDX was, if you pull up, and we can get to this in a minute, but if you look at a 5-year chart of the weekly chart of the NDX, it's far outside the upper Bollinger Band that it is, and even more now today. It's the most it's been outside the upper band in 5 years. And we're now into exhaustion, especially on the 9-day time frame. We're down 25, which is right there with just looking at maybe the top 2 or 3 most exhausted it's ever been. And so I told my students, these moves go on always longer than you think they should. And I wouldn't be surprised to see us continue higher and make a run at 20,000 this week. I didn't know we'd get it on Monday, but that's what I thought we might see before this thing maybe takes a break, pauses, peters out, goes back the other way. And so we're putting positive deltas in place, which means adding, things in place of our sold strike so that we can make some money off that. And we can use that if we need to roll and do that sort of thing. And so I'm very happy with what we did on Friday and all that stuff ahead of this, not knowing this move would happen, but it certainly is just doing its job for us today on that. So I don't know how much longer it will go. At this point, 4,500 on the SPX, 20,000 on the NDX, big round numbers. Think of them like magnets at this point. I think we have to hit those, whether it's today or maybe sometime this week. We'll see if we get slapped down and get a nice fade in the end of the day. We see that on some days like this, but that's where we're at. And the only thing I'll say is we're closer to either a pause to corrective action than we are to continue just skyrocketing higher. This kind of reminds me of a finishing move today. So
this actually looks pretty close to what happened at the beginning of 2018. If you remember that, 2017 was like a crawl up the upper band.
Yep.
And then
you're having to go back over 5 years.
Yeah. So just when you thought that, like, we got over into 2018 and we thought, well, this is not going to continue. And then it absolutely it hammered like crazy up way above. And so that was into the latter part of January. And then we had a swoon.
Right after that.
Yeah. We had a nice little swoon, which was real. That was about a 10% swoon in like no time at all. So let's go back to today. Let's see what today is. And that's real similar. It's like 1, 2, 3 weeks. We're way above the bands. Yep. Notice what happened here is that's a little bit of a squeeze, you think? That's a little bit of a squeeze on the
taking
Bollinger
that
Band.
final energy out so that it's getting to that exhaustion time.
Yeah. So let's go over to the fractals and let's look at multiple time frames here. We can get rid of the tickers here. But if we look at this, we were, we had some pretty heavy energy here. Yeah. And we still had quite a bit of it into the end of May before this little move here. And certainly on the daily chart was all wrapped up like right there. Yep. And so range contraction leads to range expansion in the direction of the trend. So
now we've got an extremely exhausted daily chart. It's sitting around like 19 or 20. We've got a weekly chart that's sitting like 24-ish or so. And so that's what I'm saying. I think at this point it's so close. It's got to tag that round number. maybe even go a little above it. But I think at some point over the next couple of weeks, we get slapped down some.
Yeah. Hey guys, if you have any questions, please let us know. We've got to take off early here. And in fact, I'm giving a presentation at the top of the hour over on the oh, what's the name of the group?
Synergy Trader.
Synergy Traders. Yeah, I'm over at Synergy Traders at the top of the hour. So we're going to finish up here in just a few minutes, maybe 10 or 15 minutes, and then I'm going to scoot over there and get set up. So I'm going to be on for an entire hour, just going over charts and taking requests from people. So if you look in the more information below this specific video, you'll see the sign up link for that if you want to join me over there. So in the meantime, if you have any questions for Dave or myself, please let us know. Or if you're watching this on a replay. The
final hour should be really interesting today. We're either going to just go parabolic or we're going to get sold off pretty heavy, I would say.
So today, you can see today started off like a really normal day. Here is, this is our upper and lower expected move. So we actually, we went through a contract roll. So for those that are wondering about this gap here, we just did a contract roll from the June contract into the September contract. So now the front quarter contract is September. And so that always happens right before expiration, the quarterly expiration, which is this Friday. So now we're on the September contract, and this has got a premium versus the June contract because of what's called cost to carry. So we had a little bit of a gap down this morning, believe it or not. So we were kind of weak, and we're wondering if we were going to do anything at all. And the day started out extremely benign. And so right off the bat, as I finished up my trading room, we said, okay, we're going to make sure that we can handle any more downside here. But that was kind of my thing, was to make sure that I had the downside taken care of today. And we set up a 0 DTE iron fly. Well, immediately we started leaking to the upside. And I was thinking, oh, well, where's this coming from? And so this is why we do what we do, is as the price came down to the anchored VWAP, I was out. I was gone. That's it. So it was a 28-minute hold, $50 per contract, generally making about 5% on risk with that. And so my day was done for the cash flow stuff. And then, boom, look at this thing go. I mean, I was talking to one of our folks in the live room, and he's like, well, what do you think is going to happen here? And I said, when I see consolidation happening below an important level, this is the upper expected move on the day. That's one standard deviation of movement from the opening print up to this blue line. That's one standard deviation. And so that's a known number. Everybody knows where it is. And so when you see consolidation at a level like that, you're going to expect to see it break through, because the trend is strong, and it's just gathering. It's winding up the spring before the next move. And so this might have been a day to buy call options. If there is ever such a time, this might have been the day to do that, because real strong move, right? We hardly ever get these. And they always show up when no one's looking for them. They never show up when everybody's looking for something like this. So I agree with Dave. I think 20,000 is certainly a target. I think it's going to be tough to get by that point. I think you're going to have a lot of overhead supply up here, either people shorting it or just outright taking profits on the move off the 50-day moving average. Boom. There we go. Mm-hmm. Now, the S&P is, we're seeing about the same thing on the S&P. We got 5,500 on the SPX, which is not that big of a number. But what we are seeing is that the price is doing a good job of running in between these 100-point moves. It's using these 100-point round number resistance and support all the way through here. So notice how it came down to 5,200, bounced off at 5,200, and then, gapped above 5,400. So there's all kinds of things that are going on here in this chart. However, like what Dave talked about, is we're seeing exhaustion no matter which way we look for this. So,
yeah, exhaustion doesn't mean it has to have some massive pullback. Exhaustion just means may just have to go sideways for 3 to 4 trading days on a daily chart. Weekly chart, maybe a few weeks. You know, a lot of times when you see both like the daily and the weekly into exhaustion, you're going to get typically a corrective type pullback. So you can see that into the end of the month, because remember, the end of the month is the end of the quarter, right? So you could see some selling into next week, just to take profits off the table before the end, to book them for the quarter. So that might be what you're seeing today, you know, some piling in to get things up there so they can fade it off into next week and the end of the quarter. That's not uncommon. So, but
I
with,
tell you what
yeah,
I'd love to see here is this is the Dow, and the Dow is really, really lagging right now. The Dow is
it
just
is
on the
lagging.
floor. But
You got rotation coming out of it.
look what's going on here is that it's doing all the hard work right now. What we typically see with a rally is we see strong off the bottom as we get all the shorts on the wrong side of the trade, because it's such an obvious trade, right? So all the shorts have to clear out. And then you get into a period of kind of acceptance where everybody says, okay, it looks good. And then you get into this thick in the middle area here where it just sort of like it doesn't go anywhere. And then typically what we will see is in the midst of a primary uptrend like this, we will typically see this thing go berserk at the final end. So strong off the bottom, thick in the middle, rising to a parabolic finish. That is something that we see literally every time. Every time. They're always different, but the same basic structure is there, and it's because of the fact of human nature. Even
That's
if
basically what you're seeing on the NASDAQ right now on the
right.
NDX.
So it's the same thing. So it would be interesting to see if we get some rotation. If we start seeing the Dow get above 39,000, we may be starting to see that, especially if the NASDAQ starts to
peter out or fade.
Boy, look at that. I mean, just about on any time frame, look at this. We got strong off the bottom, thick in the middle, rising to a parabolic finish. Even on the weekly chart, strong off the bottom, thick in the middle, rising to a parabolic finish.
I mean, it's like textbook.
It is. It is. So any questions out there? Anything else that you guys want to bring up? Again, we got to hit the road here in a couple of minutes, so we'll make time for any additional questions or anything like that. But, guys, the trend is your friend until the end. And so this is why we play the trend. We look for energy, but we don't use the energy values, especially at the larger time frames, to say, oh, short it, because you can see these momentums coast for a long, long time, way past their due. And one thing I will always say is the bears are always too early to a move. Especially in a primary uptrend. The bears, usually what happens is they got run over, so they're pissed off, and so they short it again and again and again. And pretty soon, I mean, this is right out of a book from 1905. Jesse Livermore. That's one of the ways that he blew up his account was he saw it. He saw the bear market coming, and he started shorting. And he was too early. He was too early, and he got run over, margin call, wiped out, and then it moved to the downside. So that was one of the
like that.
It's always like that.
So, so that's what I was telling the students. I was like, you know what, we're gonna put things in front of this. It's probably gonna run up and get to like where our strikes are. These things will help pay for it. For us to move it around if we need to, but we have to be really careful on the put side. Because when it does turn, it'll probably be fairly nasty, to the other side. So you have to be careful not to get caught on the other side of it too.
Be careful what you wish for,
like we do and stuff. And that's, for the most part, you don't really have to do much with those things, except for you get a move like this. And this happens once, twice a year. And then we'll get into a corrective pattern, and so it makes your P&L look crazy because you've got, you're selling options and stuff. So moves like this always do that. But if you can clear all that out, keep that out of your mind and just say, okay, where's my net? How do I work this? And I keep moving it along to, keep it in the game. And you typically get out of it. And usually I have, 300 plus trades a year. I typically got 8 to 10 that I got to deal with like that. So I'll take it.
Yeah. Be careful what you wish for, because you may get it. There's so many people that I know of that are, they miss the move to the upside. Or they chase after it and they're like, well, Okay, that's
they
it.
get
I'm
faded
gonna
hard.
start to short it, and then they get run over and run over and run over. So,
Yep.
and then it's only when this thing finally pukes, when nobody is looking for it. That's
Yeah.
usually when it happens. So,
Yeah,
okay,
we'll
guys.
see. Like I said, we'll see. The final hour should be fun. It's either we're going to see, kind of a parabolic, just nonstop into close, or you're going to start to see this thing fade down through the end of the day.
Yeah.
Look for it's either you're either going to see a big buy program or a big sell program.
Yeah, we're already starting to see the fundamentals, the market internals are starting to fade down just a little bit.
See some selling. Yeah.
Yeah. So we'll see.
So,
All right, everybody.
cool.
Hey, I invite you guys to meet me over at the Zoom call.
The link that's in the bottom here, right below the video.
Yeah, sign up for that, and you'll be invited to the link. And you can, if you can't get enough, you can join me for an hour.
Hey, you analyzing the market for the final hour? That's going to be a lot of fun for people, man.
It should be should be a good time. So, all right, thanks everybody. You guys take care. Bye now.
Bye.